The bad math behind why we paid off our mortgage. This is a little story about how we paid our mortgage off and why. We moved to Florida after we recently got married. This was in 2007, uh, 2000, end of 2006, and we moved to the north of Miami, and we moved there right before the real estate crash. We got jobs. I was only earning probably around $14 an hour. My wife maybe a little bit more at 15. And we wanted to buy a home, but we quickly learned that we were priced out of a house. We had a little apartment, probably paying $900 a month for our one bedroom there in Boynton Beach, Florida. And we liked the area. We enjoyed it. There was things to do, weather was great, and it was the first time that we lived in such a tropical environment. And we envisioned us staying there and settling down, starting a family. As we looked to buy a home, we quickly realized that we could not afford a house. The home prices were astronomically high, especially for our low income. And even though we were assured by the mortgage brokers, by the real estate agents that we could get a loan, we could afford the house, we realized it was not a good idea. The only thing we could really afford was maybe a condo. We were worried about the HOA expenses, things that were kind of out of our control, and we did not think it was a good idea to buy. And one story that really resonated with us back then, we were house hunting, driving through these neighborhoods, and again, this is 2007, right before the market crash. And we were driving through these brand new, beautiful neighborhoods, gated communities, and every house was for sale. Every house had been purchased and was trying to be flipped. We were driving through this neighborhood, particularly on a Saturday, and every other house had somebody sitting in the driveway in a lawn chair next to their for sale sign, and they were trying to get the attention of the people driving by so they could try to sell their house. Nobody lived in the neighborhood. Everybody was trying to flip. It was seen as an investment. It was so weird. We realized, why would anybody want to buy into a neighborhood that nobody lived in? That these houses were just looked at as investments where they could quickly buy and sell them. And sometimes these houses, new on the market, had already sold a couple times. And we did not want to buy into that. So we moved out of the area, broke our lease. We moved to the DC area. We had to any of the pay ourselves out of the lease because we didn't reach the full term. We were given a 1 month free when we signed. That had to be paid back. But in hindsight, it was worth it because we probably would have lost our jobs in Florida. We probably would have been in a different situation had we stayed and witnessed the market crash in Florida. Moving to DC, we actually made a lot more money. Probably increased our incomes by, I would say, 30, 40% just by moving up to that better economic area. And when it was time to look to buy a house, the market was already starting to correct. And we were able to buy a home. It was a bank-owned home. This was, again, right at the beginning of the market downturn. So even though we bought into this house, the value of the house still had more to fall. But we purchased a home, a nice, modest four-bedroom home for about $380,000. And we purchased this home in, let's see, 2008, about July of 2008. And our mortgage at that time was about 6.375. Mortgage rates were ticking up as the market was going down. And that mortgage, we ended up refinancing it a little bit within a couple years as the mortgage rates continued to come down. Um, but one thing is that we wanted to pay the house off. My wife, she was determined to pay the house off early. I couldn't convince her otherwise, and I kind of agreed that I did not want to keep this mortgage for the 30 years that we had signed up for. So we paid it. We started paying extra every month. Personally, I didn't want to pay extra. I wanted to invest that money on the side, and as we built up our investments and our savings, then I wanted to pay it off in one fell swoop. Um, it took me years to convince my wife of that. Eventually, about 3 or 4 years later, um, she saw the growth of our investments and the math that really made sense to save that money, not put it to the mortgage, but put it into investments for a long period of time, and then pay off the mortgage. And that's what we did. But first we refinanced from 4.75. We refinanced again in about 2012 to about 3.5% mortgage. And in 2012, that was actually a 20-year mortgage. So we were really focused on paying it off. And this is kind of an interesting little chart here. This kind of shows our net worth as we were kind of paying it down, and you can see here, beginning of 2018, we were under $1 million. Then we crossed over $1 million, and in that year, we had pretty extraordinary growth. Up to the end of the year, just in about 1 year's time, it had increased significantly. I think about $380,000 um, just in a 1 year time. And that is an incredible percentage if you look at the starting of about 900 and increasing to about $385,000 from 900,000. It's You kind of forget how strong the economy was during that 2019 period. Um, and with the market so high, us crossing over that $1 million mark, I felt confident that it was a good time to pay off the mortgage. At that time, we had purchased a home, for 380. We had put 20% down. We had a mortgage of about $300,000. What was left in 2020 was about $174,000. We wired the money, paid it off, and became mortgage free. And I don't regret that decision, especially what happened next was kind of what I see as remarkable. You know, this was our balance before, paid it off. We were just under 1.1. And then the economy was so strong, the next month, pretty much in just less than 1 month period, our investments then went up to 1.3 million. Absolutely remarkable. That the amount that we had paid off was more than recovered in just a month's period, which shows you how hot that economy was right before COVID hit. And you know what? COVID hit, and you can see, the investments dropped 300 plus thousand, 350, $360,000 plus in just a month's time. And we had our mortgage paid off. I was very comfortable. I was quite happy about that. Um, and that goes to show you the mental weight that a mortgage and debt can have on you. When we entered the pandemic, we were debt free, mortgage free, and I didn't panic. Didn't worry about our other investments. We rode it through. Luckily, we kept our income, and the markets did quickly recover. And again, we didn't have our mortgage payment, so we had extra money that we were able to put into the market. Mathematically, it's not always a good decision to pay off the mortgage, especially if you have a rate that can be in the threes or below 3%. And even though we had a relatively low mortgage, we wanted to be debt free. We paid it off. And as you can see, during this time period, the timing worked out and things worked out well for us. Um, this here is a little summary of the investments we had during the time when we paid off our mortgage. Um, there's a couple of things that I noticed, which I kind of forgot about, kind of looking back here in time. This is in January January 12th of 2020. Um, this column here is pretty much the non-retirement money that we use to pay off our mortgage. You can see these empty marks here, little dashes. These were holdings that I had sold in order to put this money together, which was sitting in our checking account at that time, in order to pay off our home. This was our net worth on that day when I ran this report. And one thing that's kind of funny that I see here is NVIDIA. I kind of forgot that, I did hold NVIDIA back in 2020. I did not keep it, unfortunately. I think I looked up how much that actually would be worth today. Probably worth about 180 plus $1,000. Um, I think what I did is I had NVIDIA and AMD, and I decided to stick with AMD. Did well, don't regret that. But it's just quite funny to see that, what could have been. And you know what? Paying off the mortgage, that money, if we would have invested, probably would have done much better. But the mental weight that was lifted, the ease that we experienced going through COVID, knowing we didn't have to pay for a mortgage, knowing that if we had income loss, that we had the money to survive it and to get through, was very valuable. And if people are looking to pay off the mortgage, generally I steer them against it, not until they have a sum of money set aside that it makes sense. Um, Retirement saving is very important. College educations for kids are very important. And those sometimes come ahead of paying off the mortgage. But we paid it off. That's kind of set us up for the position that we're in now. And we've always wanted to go into retirement mortgage free. And that's been our plan. We've stuck to it and we're getting closer. Um, Take a look at my other video. I'll be doing constant updates on net worth and investments. Um, Hopefully, my goal of retiring early can be achieved here in the next couple of years. We want to bring our net worth up to about $3.3 million before we retire, and hopefully in 2 years we can achieve that. It's quite ambitious, um, but I'll keep you informed. And it's quite funny looking at some of these interesting investments, how Sprint has since turned into T-Mobile, Netflix. I here I have about $53,000, where today I have about 120. Could have had more, but I sold some in order to pay for that mortgage. Um, Interesting to look back in this little time machine here and see some of the decisions I made. A lot of poor decisions, but some of these investments really have paid off, and quite interesting to see the evolution of these investments and our financial situation. So, thank you, and look for another video and see if we are able to meet our financial goals. Thank you.